All right, today we're looking at a real corporate giant that's basically at a massive turning point. We're going to use their own investor reports, their own filings, to break down how this Japanese powerhouse Mitsui Chemicals is staring down a perfect storm of challenges, and, more importantly, how they're planning to radically reinvent themselves for the future.
So, to really get a grip on just how big this transformation is, you've got to start with the two big pressures that are forcing their hand. And this isn't just, some boring market shift. Nope. It starts with a real moment of crisis and a surprisingly public admission right from the very top. So, check this out. The story they're telling, it doesn't kick off with profits or some shiny new product. It starts with a direct apology from the CEO. This came right after a serious chlorine gas leak at their Omuda factory. Now, that right there immediately sets a tone of accountability. It shines a huge spotlight on a critical internal pressure, the absolute non-negotiable need to double down on safety and just get their operations right. And at the very same time, they're battling these intense headwinds from the outside. Their core business, the foundational basic materials, is just getting hammered. You've got fierce global competition and, they say this themselves, a massive supply glut, a huge imbalance driven by a ton of new production capacity coming out of China. So you can see they're getting squeezed from both inside and out.
Okay, so you've got an industrial accident on one hand and a super tough market on the other. What's the plan? Well, they've put everything they've got behind this big, comprehensive strategy they're calling Vision 2030. And let me tell you, this is not a minor course correction, it's a fundamental pivot. It's designed to completely reshape the entire company over the next decade.
Now, to really get what this plan is all about, we got to look at how the company is actually put together. They've got four main business segments. And this shows you right away, they're not just some simple chemical company. Not at all. They're working in really different fields. I mean, everything from healthcare to the stuff that literally powers our digital world. And this slide right here gets to the absolute core of their strategy. They are making a choice, a big one. On one side, you have what they call their growth engines. These are the high-tech, high-value areas like mobility, ICT, and healthcare. That's where all the resources are going. Then, on the other side, you've got the legacy business, basic and green materials. That part is now the focus of a major restructuring. Now, they're not just dropping it, but they are fundamentally rethinking its entire future. And this is a perfect illustration of what that growth actually looks like in the real world. We're talking about developing these super specialized, next-gen materials that are absolutely essential for the industries of the future. I mean, think about it. Advanced plastics that make electric vehicles lighter and way more efficient, this is where they see their edge. This is their game plan. So what's the end game for all this change? What's the big goal? Well, it pretty much boils down to this one number. The whole point of Vision 2030 is to drive their core operating profit all the way up to 250 billion yen by the end of the decade. That's a really ambitious target. It means their big bets absolutely have to pay off. Okay, but look, a grand vision and a big profit target, that's one thing. How do you actually get a massive, established company to innovate and, just move faster? For Mitsui, the answer meant a total rethink of their entire research and development setup. And this is the exact question their new chief technology officer was basically brought in to solve. In a market this competitive, speed is everything. The old way of doing R&D, it just wasn't cutting it anymore. They needed a whole new model, something way more agile and a lot more focused on the bottom line. So what was their solution? They decided to split R&D into two totally separate tracks. On one side, you've got pure research, the deep, long-term foundational science that might lead to some huge breakthrough years down the road. But on the other side, you have development. And this part is now tightly linked with the business units, laser-focused on solving customer problems right now and getting profitable products out the door fast. And the CTO, Toshihiko Omote, he put it really clearly himself. He said, this new structure is all about focus. By making the mission for each side crystal clear, long-term innovation over here, short-term profit over there, he believes it just makes it easier for engineers to really dig in and engage effectively. It doesn't matter if they're on a 5-year research project or a 5-month product development sprint. Okay, so that's the strategy, but does it actually line up with the financial reality? Well, the numbers from their latest interim report tell a really fascinating story. You can see both the huge challenge they're up against right now and also their confidence in the path they've chosen. First off, those headwinds we talked about, they are very, very real. Their interim revenue came in at 813.6 billion yen,
but that was actually down by over 76 billion yen from the last period. And that drop directly reflects those market pressures they mentioned, especially in that basic materials business.
And of course, that kind of pressure hits the bottom line hard. Their interim core operating profit also took a tumble, dropping by 8.3 billion yen down to 44.5 billion. They point to things like higher raw material costs and just lower sales volumes, which pretty much confirms the tough environment they're trying to navigate.
But, and this is a big but, here's where you see their confidence in the plan. Despite that interim dip, they're actually forecasting a rebound for the full fiscal year. They're projecting core operating profit to climb from 101 billion up to 110 billion yen. Now that suggests they believe their strategic shifts are already starting to work, already starting to push back against those market headwinds.
Okay, last piece of the puzzle here. A plan this complex, this big, it needs a ton of coordination and oversight to have any chance of succeeding. So to steer this whole transformation, the company is leaning really heavily on a formal, robust corporate governance structure. And this diagram, which is straight from the report, shows you exactly how they're handling risk management. You can see the flow, right? Information goes from the risk management owners down on the operational level, then up through a central committee, and finally all the way to the board of directors. It's a super clear chain of command, and it's all designed for accountability. And here's the kicker. This is how they tie it all together. To make sure these strategic goals actually get met, they've directly linked executive bonuses to key non-financial targets. We're talking concrete metrics here, like reducing greenhouse gas emissions, preventing major accidents, and even improving employee engagement scores. It's a really powerful way to get the entire leadership team pulling in the same direction, all aligned with the core principles of Vision 2030.
Which, of course, leaves us with the big question. Mitsui Chemicals has been incredibly transparent about the challenges they're facing. They've laid out this clear, ambitious blueprint for the future. They're restructuring their core business, they're investing in growth, and they're totally reinventing how they innovate. The plan is on the table, so the only question left is about execution. Can this industrial giant really pivot fast enough to not just survive, but that actually lead in the decades to come?